And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking, a Pan-African bank that's invested in your story, because your story matters. Good evening. Welcome to The Money Show tonight. I'm Stephen Grootes. One of those days where the Stock Exchange News Service sends is just overflowing with corporate and half-year results, annual results, and of course more to come from all of that. And you'll hear from Aspen Pharmaceuticals, their Chief Financial Officer, in just a couple of moments. But also Santam had results out. Of course, the JSE itself had results out. Bidvest have a half-year update as well. And we'll sort of go through them one by one. What you try and do, of course, is trying to build up a picture of the economy. And probably the most useful is Bidvest, because it's such a diverse company with so many different divisions. And I'm sorry to say, and if that's what you're looking for, and we'll speak to them in about an hour or so from now, it would seem that their update really largely flat. They're suggesting that there's still big problems in the logistics supply chains of our economy. I think anyone who tries to do business will probably agree with that. I mean, it doesn't matter whether it's large amounts of freight moving by rail, which is still problematic in some cases, but also just, for example, moving around Johannesburg, trying to do deliveries in a day like today when it was raining for much of it and raining quite hard. I sometimes think Joburg should just have a big closed for business sign when it's raining like this during the day, because it's just so difficult to move in any kind of wheeled transport whatsoever. But really that kind of day. And on the JSE, ending up very strongly, largely because of some of this corporate activity, but also, and a reminder of how important the geopolitical situation is after what happened in the White House on Friday night, when the US Vice President J.D. Vance and the President Donald Trump appeared to, certainly in my view, gang up against the Ukrainian President Volodymyr Zelensky. And of course, all of that pushing European defense shares up again very strongly on the day. So lots to look at over all of that. Also, just, you might have missed it because it happened on Friday, but COSATU proposing on Friday that, in fact, the revenue shortfall in the budget, let's call it 60 billion rand, it's a little bit less than that, could be made up by giving the government an annual holiday, just a one-year holiday, in terms of the payment it makes to pensions as their employer of government employees. And the reason you could do this is because the government the employee pension fund at the moment is actually 110% funded, so there is extra money there. And quite a few people suggesting that's a pretty simple, pretty easy idea. The problem, of course, is the principle of the thing. And is what happens if you want to do it again next year, for example. Well, we'll look at that in the next little while as well. You might well have a view on where you'd like your pension to go if you do work for government. 011 883 0702 021 446 0567, and of course voice notes tonight on 072 702 1702.
The Money Show
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
Well, a strong update from Aspen Pharmacare today. Its first half net income up by 3.2%. Also announcing it's now likely to sell more drugs that treat diabetes, including following deals with Novo Nordisk and Eli Lilly. Also means it'll be producing human insulin for Africa here in South Africa. The JSE loved it. Its share up very strongly today. Sean Capazorio is the Chief Financial Officer at Aspen Pharmaceuticals. Sean, good evening. Thanks for your time tonight.
Good evening, Stephen.
You've had a nice, positive 6 months. Most of your segments are doing well. I did notice that revenues from your over-the-counter department were down, I think, by 3%. Surprised me slightly compared to how well the rest of the company was doing. What do you think led to that?
Yeah, I think if you look at it, that's in reported currency. If you look at the constant exchange rate, we were 2% up. And it's really just an order phasing in our Africa, Middle East region. So we do expect to catch that in the second half and deliver probably more north of mid-single digit growth for the full year on our OTC business. So it's just really just a phasing element for the first half. But the underlying growth in our OTC business is very strong.
Okay, because I was a bit concerned there might be a lack of demand. People who didn't have to take medicines were not going to take medicines because they couldn't afford it. That's not the problem.
No.
Okay. A big part of your future growth is clearly going to come from diabetes drugs, including Mounjaro. You launched that in December, if I recall. How much demand are you expecting for that? I mean, diabetes is a big problem both in South Africa and across our continent.
Yeah, so I think we from a from a diabetes perspective, we've taken over. You'll recall a year ago, we took over the distribution and promotion of all the Lilly products in South Africa and sub-Saharan Africa, and part of that deal was we were able to launch their diabetes product in the country, which we did very successfully in December. So we do see quite a lot of opportunity for that product to grow in the South African market, and we do anticipate it being one of the largest products in the South African private sector in the medium term. And that's an originator product, so that's really where the focus is to drive that product from as part of the Lilly overall portfolio. I think in terms of diabetes for the continent, we're well placed there because we've been awarded the contract with Novo Nordisk and obviously quite well progressed down that line, where we'll be making human insulin for them, and they'll be supplying that as part of their access program to South Africa and other African countries. So that would be the sort of foray into, let's call it, diabetes. So we're not going to be supplying diabetes products to the rest of the continent, but we will be doing it for Novo Nordisk as part of the manufacturing contract that we have with them.
That manufacturing process to create human insulin, how complex is that? I mean, obviously you'd want to get it going quickly, but it's the kind of thing you need to do precisely right.
Fortunately, Stephen, we get the drug substance from Novo, so all we do is the fill and finish. So all the magic happens before that. Well, let me say the real magic. And all we do then is take that drug substance, obviously in a very sterile environment and lots of controls, etc., and we fill and finish that into the final insulin vials. So the actual drug substance is manufactured by Novo themselves.
Around the world, we're seeing richer people spending money on weight loss drugs. Some of them use the same active ingredient as drugs currently used to treat diabetes. Are you expecting some demand for those products in South Africa too, if not already, at some point in the future?
Yes, I think, and that's where you'll see we've got something, and there's a term called GLP-1s, and that's the category that covers diabetes and obesity, which are quite correlated. A lot of people have got both, and they correlate quite strongly with each other. But we've invested quite a lot in that space because we do have the manufacturing capacity to make those type of products. From a fill and finish perspective, we've invested in intellectual property, and we've also got a very strong emerging footprint both in Africa and other emerging markets. So we've made very significant progress in being able to launch generic products of the GLP-1s, and so we look to be potentially commercializing those from early calendar year 26, and that'll be at a lot more of an affordable pricing, and being able to supply the market, which I think is running short of these products across the globe. So that's certainly a big strategic progress that we've made in that area, is in that space. And that is the largest growing segment in global pharma now, Stephen. I think globally they predict that market to be worth about $150 billion by 2030. So it's a very, very fast-growing segment. And, a lot of people, unfortunately, with our lifestyle, are getting diabetes and having obesity sort of potentially at the same time.
I know in some cases, and some activists have made this point, there's a risk that companies like yours, or perhaps more of the companies in the US, will spend more time and money supplying anti-obesity drugs that rather than drugs to treat diabetes. They often use the same sort of equipment, some of the same active ingredients. Are you going to be prepared to manage that process?
Absolutely. I think our whole mission at Aspen is affordable, quality healthcare. So we want to provide patients with quality product at an affordable price. So we will certainly make sure that we've got all the right capacities to help meet the demand. But there is a very large demand. I think there's over 1 billion people globally that have got either type 2 diabetes or obesity. And at the moment, just interesting enough, globally, only about 15 to 20 million people are actually getting access to those products. So there's a large undersupply of these products in the market. So I think not only Aspen, there will be other generic players coming into the market to try and meet that short supply of these products and make them more affordable.
You're expecting double-digit growth in revenue and operating profit with your commercial pharmaceutical portfolio in the second half of the year. In China, as I understand it, there was a move by the government to lower drug prices. You would obviously have been affected by that. Is that process kind of finished? Is that going to give you some optimism for the future?
Yeah, look, I think we sort of lapped. We had the last lap of that in this half's results, where we would have had price cuts in this half relative to the previous half, and that's behind us now. I think we did the deal, if you recall, where we brought the Sandoz portfolio in China, and that portfolio together with the Aspen portfolio have now all gone through that price cutting process, and so I think going forward we've got a very solid base, to grow in China. So I think the risk is behind us, and that's certainly a big message that we've put into our results. But China is always a tricky market, and you've got to go in with your eyes wide open. But we certainly very happy that we've now de-risked that business with this combined portfolio, and we've gone through the price cutting process. But certainly that was a big challenge for us even a year ago.
Sean, thank you very much indeed for your time. Sean Capazorio is the Chief Financial Officer at Aspen Pharmacare.
WhatsApp Stephen
On 072
702
1702.
The insurance company Santam announcing today it's reporting a 51% increase in headline earnings per share. Gross claims from policyholders and weather-related claims both slightly down from last year. The company also saying it's made certain changes to the way it underwrites policies in the last 2 years, and is also now taking steps to reduce the cost of car repairs. Wikus Olivier is the Chief Financial Officer at Santam. Wikus, good evening. A big increase in earnings. You've been changing the way in which you underwrite policies. You've increased premiums in some segments. Is that paying off? Has that made a difference to help you get to where you are now?
Good evening, Stephen, and good evening to your listeners as well. Yes, it's definitely coming through in our results. So we've made a number of underwriting actions over the past 2 years, from premium increases, as you mentioned, also having to increase some excess amounts for certain policies, but then also to become very much more sophisticated from a risk underwriting perspective. And all of these measures, the benefits are coming through, so we've seen it in a more than doubling of our underwriting profit in the current period, which also translates through to a significant increase in our return on capital as well.
And that hasn't seen any clients leaving because their policies are too expensive or the excess makes it not worth it?
Initially in 2023, we did see a slight pickup in our churn rate, which was expected, but it was unfortunately necessary actions that we had to put in place in the interest of the long-term sustainability of the business. But in the current year, we've seen most of our competitors implementing similar measures, which meant that we became also more competitive, and we did see that the churn rates come down this year to kind of more in line with past experience.
You had a slightly lower level of claims from policyholders. Was that just fewer weather incidents, or were there other factors at play?
That's from a weather incident perspective. We incurred claims of about 750 million from weather catastrophes this year, which was actually broadly in line with the previous year. We did see a decline of about 300 million in losses from other incidents, particularly property fire losses. And then we've also seen the period where our normal frequency of motor claims was also lower than in the past, which is more of a seasonal nature.
And talking about seasons, I mean, weather incidents are a big major factor for you. You've linked premiums to geocodes. Are some parts of the country now you have to pay more to get insurance? Is it that simple?
Yeah, I think you definitely can't generalize. It's very much risk specific. If you look at our flooding exposure over the last 2 years, it's occurred across a number of provinces and in selected areas within a particular province. So we very much focus on underwriting each and every specific risk, and it's very much dependent on where that risk is located, where it's close to flood lines, rivers, etc., and even from a fire risk perspective, factors like proximity to fire stations, etc., also plays a big role in the risk attached to a property and also the premium that we need to charge. So definitely not a case that certain provinces have experienced a general increase in premiums.
Sure. In some parts of the world, there's predictions about the future of insurance, but in Florida in the US, for example, some areas which have bad weather frequently may just become uninsurable. I presume we're quite a long way from that happening in South Africa?
Definitely no. South Africa traditionally has been known as a benign environment from a catastrophe exposure perspective. That said, we've also seen an increase in extreme weather events, with the number of events and also the severity of them increasing over the last number of years. But we are definitely not in a position where we say South Africa or certain areas of South Africa is not insurable.
South Africa, not a catastrophe, Wikus. There's a headline there. You report that the cost of repairs is rising above inflation. And from what I understand, that's because car parts, their prices are rising above inflation. What's driving that?
Yes, if you look at the insurance value chain or claims value chain from a motor perspective, there's actually a number of components in there. So car parts is only a portion of it. There's also paint prices that's increased above inflation. And then, of course, labor is also a large component of the overall cost of repairs. From a parts perspective, we are reliant on imported parts for certain vehicles, and which is very much dependent on the rand exchange rate. And we have seen the rand weakening over the last few years, which of course contributes to the inflation for imported parts.
Wikus Olivier, thank you very much indeed. Chief Financial Officer at Santam.
The Money Show.
The markets.
Siboniso Ngomalo is the Chief Investment Officer at the Old Mutual Investment Group. Siboniso, good evening. Let's pick up at Santam, actually. Pretty strong update from them.
Yes, a very strong update, Stephen. Good evening to your listeners. And so I think we've got to take a step back when we talk about short-term insurers. And I think I understand that, remember, 2021, we had that thing called COVID. And in COVID, these companies tended to make what we'd call above normal or super profits, if we are aggressive in our statements. Because nobody drove, which means nobody crashed and had incidents, and we all stayed at home. And generally, the claims ratios were very low. Then things opened up. And when things opened up, we started seeing a weaker currency. We had the KZN riots. We had floods in KZN. And these companies pass on, they themselves reinsure. And we suddenly saw South Africa actually attracting much higher reinsurance rates. Inflation was very high during that period. And so therefore, the last 2 years actually have been very tough for the industry. And so now we're starting to become a little bit more normal. So we saw a strong recovery, but that recovery must be taken in the context of what's been a really tough period where they've had to increase premiums. Like you said, had higher churns, but things seem to be normalizing now. And I think that you can see it with their claims ratio decline significantly to 61% from 66.2. And so therefore, that actually is the story of these results. Hence, then, you've got net income growth growing about 51%. So a strong recovery, but it comes from a base that was very weak, that was really tough for short-term insurers like Santam.
Aspen Pharmacare, I mean, a nice strong update from them, but their share price up nearly 12%. That's quite a big increase in shares.
Yes, it is. It is, Stephen. But again, you've got to look at where the share price started out. And so I think Aspen over the last 6 months has actually come down quite a lot from its peaks in the upper 200s. And so where the share price is trading now is actually quite substantially lower than where it started off about 6 months ago. And what had happened? Actually, Aspen had disappointed at that specific time. I think they were guiding over the last year and a half to strong, they've got manufacturing capacity, and they were guiding to winning contracts in that space, and that manufacturing capacity being filled up, which means that they'd obviously make more revenue and many more profits because the capacity is there, and so there's operating leverage there. And what we saw were two periods in terms of 6 monthly periods of disappointing. So if we look at their manufacturing capacity and gross margins, actually they went from 23 to 20 to 5 to 5. those two were disappointing. Now they're back at 15. And so therefore, that's the story. And so announcing new contract, and again, guiding forward in terms of the market and saying, hey, we reckon we are going to fill up that manufacturing capacity, and so therefore we're going to have higher profitability. And why was the share up? Because actually they exceeded expectations. The market did not expect this level of profitability growth and recovery from Aspen. And so therefore, that's why then the market's like, oh, we're positively surprised. And also, the cash flow generation was better. And so from Aspen, I think the market liked that and said, hey, we'll take some of that. And so hence the share price is up where it is.
Bidvest, its headline earnings per share up 3%. A lot of people describing that actually as flat, I saw.
Yes, it is. Yes, it is. I mean, Bidvest, obviously a large conglomerate, a very good read-through for the South African economy in terms of what's actually happening in South Africa. So if we split the result, that is overall flat. Let's look at what was stronger. So international services were stronger. South African services businesses were stronger. That was up 16. Branded products up 10%. Automotive up 14%. So again, that very strong. But actually what was weak? The freight division, impacted by maize export volumes that were disappointed. They expected to improve going forward, but actually that was tough. The commercial products division was weighed down by high renewable energy base from the year before. And then Adcock Ingram, that was weaker consumer spending and lower inventory holdings. And so therefore that was hard. And they are flagging that actually Adcock Ingram is going to continue. That's going to be harder to rectify, as they say in the results. So tough. There are pluses and minuses, and obviously the strength of Bidvest is that it's a diversified company, so you are going to get pluses and minuses. But what it does reveal, actually, it's still a challenging economy, depending on which segments you are in.
Siboniso, thank you so much. Still so much to talk about. It's been a very busy day. Siboniso Ngomalo, the Chief Investment Officer at the Old Mutual Investment Group. Just gone 6:30.
The Money Show on 702.
Monday to Friday, 6 to 8 p.m.
Well, in a few moments, we'll be talking about the idea that comes from Casato suggesting that the shortfall in the budget could be made up for by basically a payment holiday for government to the contributions it makes, or for the contributions it makes to the government employment pension, the government employee pension funds, the GEPF, or fund, I should say. And there are a couple of things about it that are incredibly attractive. One is it is 110% funded, so it's overfunded, so there is money. Two is there would really be no risk to workers because it's a defined pension fund, a defined benefit fund. No matter what happens, government will make up the shortfall if there's any problem. The one thing that sticks with me just a little bit is the principle of the thing. If you're a government worker, it's your pension money. It doesn't necessarily belong to anyone. It belongs to you, is the way I suppose I would see it. And that then leads to a different question, which is why should someone be using your money because they can't find the money? The other thing that just concerns me, and we do this all the time, and it gets us to the issue around debt, and I don't know if we see it like this enough. Maybe I'm the only one who sees it this way. The fact is that there is an inequality issue between generations. If my generation is spending the money and incurring the debt, who is going to pay it? Future generations. So just to be clear, surely we are then making future generations poorer than us. And that is surely a huge problem. We talk about inequality in lots of different ways in this country, and so we should. But I'm concerned that we'll be creating a generational inequality by not paying back debt. And if we do things with pensions, well, it can get a little bit complicated. I'm just worried about the principle of the thing. Your view, 011 883 0702 021 446 0567, and voice notes tonight on 072 702 1702.
702.
702.
Stephen is on X.
At Stephen Grootes.
Well, the JSE joining the results party today, announcing its headlines earnings are up by more than 9% in the year to the end of December. Net profit up by over 10%. The bourse also saying it's now earning almost earning almost 40% of its operating income from non-trading revenue. The CEO at the JSE is Dr. Leila Fourie. Leila, good evening, and thanks for your time. You've made some major changes over the last few years. You're getting more money from different sources, from commodities derivatives trading, from JSE Investor Services. Are you getting a sense this is all beginning to pay off?
Absolutely. Hi, Stephen. Yes, we're certainly starting to see an overriding earnings resilience and a strength through the cycle. And this is really because the non-trading income that we're earning is starting to counterbalance the cyclicality of our trading revenue. And, as you mentioned, our investor services was up by 20%. Primary markets was up double digit, and these revenue lines are very important when you are dependent on a more cyclical revenue stream. In addition to that, we've also built out our additional asset classes within the trading environment. So we're no longer exclusively dependent on equity market, but, for example, even though our equity market trading was only up by 1% at the end of last year, bonds and financial derivatives were up 7%, commodity derivatives were up 12%, and these other asset classes serve to counterbalance and protect us and really improve the quality of earnings.
Do you think you're able to expand these services much further, or have you pretty much pushed them as far as they can go?
We expect that our non-trading business will continue to expand. We'll continue to invest. We expect that the growth rate for some of those businesses will slightly normalize, but we're continuing to look out for opportunities for acquisitions. We're also partnering with global infrastructure and tech players to innovate in infrastructure and offer new services like our cloud-based co-location service, like market data analytics. And generally, we are constantly on the lookout for innovative new bolt-on solutions.
You've also been trying to get more companies to list. You've made it easier to list. You've tried a couple of other things as well. Obviously, it takes a little while. It does look like that's beginning to have a little bit of an impact. Are you seeing more interest in listing?
Yeah, absolutely. We have had a good year in listings, 8 listings last year, and we've got a reasonable pipeline in the next year or two ahead. Amplats will be unbundling from Anglo Platinum, from Anglo American, Canal Plus, Virgin Active, African Bank, Coca-Cola, Fidelity. Those are all possibilities that are in the public domain. Let's not forget that listings are very much connected to the macroeconomic environment. We've also seen a big surge in our sustainability bonds. Those grew by 133% over the past year, and we now have 90 sustainability bonds listed on our exchange. So we're seeing growth not only in the traditional IPO style equity environment, but also in our structured products.
When you have a big product like a big stock like a Boxer coming on like you did towards the end of last year, I presume it generates a lot of excitement around Boxer, but it also generates a bit of excitement around the JSE in a strange way. You kind of you get to benefit a little bit from the excitement around one of those big listings.
Absolutely. Stephen, the exchange and the bourse and investors are really driven by market confidence. And I think the Boxer listing did a lot to uplift cost confidence. Not only did it unlock shareholder value for those new shareholders who were previously invested wholly in Pick n Pay, but it also re-rated Pick n Pay. And these are important precedents that build on confidence, and we start to see others then start to put their toe in the water and contemplate capital raising through the exchange.
There's a lot changing in finance. And you see it in different ways. There are more banking licenses than there used to be, more banks coming in, people talking about cryptocurrencies. The whole sort of world around it is changing. Do you think, there are a lot of other ways to get capital now. The idea of an index like the JSE, very transparent, less onerous than it used to be, but still more onerous than it would be perhaps from getting capital from other sources. The fact that it's, in live real time, all of those things. Do you expect an index like the JSE to still have quite a long future despite all of the changes that we're seeing? And we do seem to be in a kind of transition period in this game at the moment.
Look, there are changes occurring, and some of them are cyclical and some of them are structural. We have seen, the surge of crypto and digital assets, and those have waxed and waned over the past, sort of 5 to 10 years. And we've also seen a switch in the type of investors investing. Ultimately, the JSE has been around for a long time. We are moving with the times and innovating and modernizing both our technology and our products. So we are starting to see new products come online, like actively managed ETFs and actively managed certificates, which are effectively unit trusts that are listed on the exchange. We're seeing interesting themes around exchange-traded funds, Sharia-linked and Sharia-compliant funds. We're seeing gender-based ETFs and ETFs with a sustainability bent. So these are all new products and new solutions. We also launched a carbon market last year, and we saw the first actual trade happening on that this year. Those trades are longer time horizon than a normal trading environment. And we've also launched a private placement market. So we are responsive to the changes that we see in the market, and we tend to partner with international specialists to go faster. And we are looking at how we can tap into global liquidity flows and create enabling technology to link us up and expand capital flows and expand liquidity in our markets.
Dr. Leila Fourie, thank you very much indeed, CEO at the JSE. Do appreciate the time. 9 minutes to 7.
The Money Show with Stephen Grootes is brought to you by Absa CIB, a Pan-African bank invested in your story and the potential it can unlock because your story matters. Absa is a registered FSP.
Well, I'll be very interested to hear your view on this on 011 883 0702 and 021 446 0567. On Friday last week, you heard that conversation with Capazorio. They're suggesting that the sort of nearly 60 billion rand hole in the budget could be filled if the employer part of pensions that's normally paid into the government employees' pension fund was paid to government instead. That's because the government employee pension fund, it's a defined benefit pension, meaning government would make up the shortfall if there was one in the future. And the fund is actually overfunded. It's currently funded to 110%. So it's got too much money. Dr. Azar Jamin's Director and Chief Economist at Econometrics. Azar, good evening. We heard from Capazorio on Friday. What do you think? Is this a realistic prospect?
It's possibly a pragmatic way of resolving the issue of a shortfall of tax revenue temporarily. The issue which you highlighted a few minutes ago is, are you not jeopardizing the situation for future generations? The other big risk is, what if markets collapse? Suddenly, these defined contributions, defined benefits that public servants would get would be under the water, and there would be a massive problem in actually finding the money to actually pay out the pension benefits to public servants if there were a very big downturn in markets. Right now we're at 110%. But, you get a 20-30% decline in asset values due to a crash. You're seeing unprecedented developments internationally on the geopolitical front. You can't be 100% sure that you won't have a huge meltdown on financial markets, and then the public servants may not, after all, see all the benefits that are due to them. Well, they are promised these, but then you ask yourself, well, where will the money come from if there's just not enough to cover them?
It reminded me of something else as well. It reminded me of the decision last year to change the accounting system of the gold and foreign exchange contingency reserve account. I had to write that down because it's the words come in a funny order. And that was supposed to see some more money going to the fiscus. And again, something that was never touched, now being touched. The Government Employment Pension Fund, never been touched. Now people are suggesting we touch it.
That's right. And the Jufekra decision, there was a big risk there, a risk in the event that the rand strengthened back to 15 or 16 rand to the dollar for whatever reason, suddenly the government would be short of money again. But there's an additional factor that leaves one a bit uneasy. We're trying to escape from taking more serious decisions on how to reallocate government spending. And if we're kicking the can down the road here. In a year's time, we'll have to revisit again the social relief for distress grant. It still hasn't been made permanent. And suddenly, if we have to find a further 35 or 40 billion rand, what are we then going to do? Are we going to raid the Government Employees Pension Fund again? Is this a precedent for, finding the soft option until it starts biting back quite viciously sometime in the future? That is what is of concern. There are other ways of dealing with the current situation in terms of cutting back on fruitless and wasteful expenditure, and we are trying to escape from having to do that right now.
I would suggest, I'm afraid to say, that in fact we're probably going to have to find that we need to spend a lot more money on defence because of the way the world is moving in the next few years. And in fact, the need to spend money for all sorts of reasons, not just that, many other things as well, will suddenly come to the fore. I am not aware anywhere of anyone in the coalition suggesting, I know the DA suggested a sort of 3-month spending review, but I'm not aware of anyone taking it seriously. It doesn't seem to be going anywhere. And I worry that if we don't stop spending money we don't need to spend, we're never going to see a proper increase and a proper improvement.
You're absolutely correct. At the end of the day, what is critically needed is higher economic growth to generate more tax revenues with which to fund these expenditure increases. COSATU, obviously, it's in its interest to opt for such an argument because part of the shortfall of 58 or 60 billion rand is derived from having to agree to additional pay increases to public servants of 23.5 billion if one follows the non-budget that was not presented 2 weeks ago. And so this is one way of not jeopardizing the additional current revenue enhancement of public servants that one sees the rationale behind COSATU trying to push this front. But again, it comes back to your point. You're taking money now from future generations.
I must admit, I hadn't thought of that actually it is in the short-term interests of COSATU to do it. My first thought was that this is something workers would hate, but actually it bolsters their position.
Yeah, in the short term, yes, but not in the longer term.
Not in the longer term, no. Dr. Azar Jamin, really appreciate the time. Thank you. Director, Chief Economist at Econometrics. Well, there is going to be a lot going on. I would suggest, I get the sense, if you look at the negotiations between the different parties and what's coming out in public about them, the headlines in the Sunday Times yesterday about where the DA and the ANC were and threats, etc. It really did remind me of the negotiations leading up to the coalition. And how in a kind of negotiating situation, sometimes you need to wait, ignore some of the headlines and just wait to see what the final agreement is and look at what their principles are. And it does boil down to, and I know there are plenty of people in the coalition who don't want me to say this, it does boil down to what can the ANC and the DA agree on and how much do they still need each other is probably the big question. My thought anyway. Good to hear from you on the matter. Good evening.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
Good evening. Welcome to the second hour of The Money Show. The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking. a Pan-African bank that's invested in your story because your story matters. Well, good to have you along with us. Don't forget, Professor Mamokgethi Phakeng, she'll be with you from 7:30. She'll be in our studio here. Lots to ask her, of course. Fascinating career journey. If you look at where her life started, things that she was able to do, and of course you'll recall what happened at UCT, but we'll talk to her a lot about what happened before all of that. Lots of other things to talk to her about as well, particularly around teaching young people maths. And if there's one thing, one of the sort of top 4 or 5 things we need to do as a nation, it's improve that, I would suspect. It's to improve education in maths. And she is, of course, a professor of maths education. Also, it's an interesting book. It's about tribes. It's called Tribal by Michael Morris. You'll hear from Ian Mann, his view on that. There's so many definitions of tribes that advertisers look for, politicians look for. I mean, in the United States right now, if you support Trump or don't, you're kind of seen as part of a tribe one way or another. It's a word with all sorts of definitions. We'll be looking at that as well. Plenty to come. Good to hear from you. I don't know if you've got a view on this COSATU tax proposal, or the pension proposal rather, on 011 8830702 021 446 0567.
702. Stephen is on X.
At Stephen Grootes.
On the next Money Show, we are talking shopping, medical aids and banking. The chief executives of Shoprite Holdings and Nedbank will take you through their company's financial results. We'll also analyse the latest fourth quarter gross domestic product figures from Stats SA. And Warren Ingram, personal finance expert, co-founder of Galileo Capital, will share personal finance rules or commandments we should all know to survive.
702. Stephen is on the Money Show.
6 to 8 p.m.
Well, still more results coming through today. We do expect more this week as well. The industrial group Bidvest reporting its headline earnings per share were up just 3% in its half-year update. Most of its divisions able to improve their margins, seeing it seems 1 or 2 issues in freight and commercial products. Also, the pharmaceutical company Adcock Ingram, it owns the majority share in that. Adcock Ingram's trading profit was down 17%. Mpumi Madisa is the CEO at Bidvest. Mpumi, good evening. Your company straddles, or your group, I should say, straddles a huge, diverse part of our economy. In some ways, it seems to have been a bit of a flat period for you. Is there anything disappointing in that for you as the CEO at Bidvest, or is that just a function of our economy?
Good evening, Stephen, and thank you very much for the opportunity. Yeah, so Stephen, I think, look, you're right. Our trading profit is flat year on year. And I think that a flat profit result is not really reflective of what's happened in the mix. So, the results are really a function of 2 groupings of performances. On the one hand, we had 4 of our 6 divisions that delivered excellent profit growth. Our South Africa services operations were up 16%, automotive up 14%, branded products up 10%, our international operations up 9%, right? So that's really strong. And that's one part of the performance. The other part you have referenced, we had 3 areas of contraction, 2 of which I did signal in the 2024 financial results last year. So freight, I did signal that we don't anticipate to handle any maize export volumes, and that materialized. Secondly, commercial products, as you said, renewables base very high. We're struggling to recycle that through that very high base, also signaled last year. And thirdly, Adcock Ingram, as you've indicated, and lower volumes with a knock-on impact on margin. We didn't anticipate the Adcock impact at all. In those 3 areas, the contraction on the profit line is about 7%. So only 3 areas, but the contraction is material overall. Where I am comfortable is that we're very clear which parts of the business are under pressure. It is not systemic. It is not across the group. And in fact, in the balance of the businesses, we're seeing solid growth.
And things could change. We're expecting a much bigger maize harvest this year, and that should lead to more maize exports.
I'm glad you're that optimistic. I haven't seen any data, so I'll take your word for it. I haven't given any kind of signaling because we haven't seen any solid data as yet. The maize export program normally starts around May. Yeah. I don't have an indication as yet whether it's going to start in May or whether it may be pushed out. The weather's been very funny, and there's been lots of rain in certain areas, not enough rain in other areas. I'm waiting for the farmers promised to come out and give us a firm view. But I'll take your view. I'll take yours. Okay.
Logistics is still such a problem for so many parts of the economy, and particularly in the railway sector. Their plans, their promises, we hear about them all the time. Are you actually seeing action? I mean, and again, we're told March is another crucial month for the railway sector. Are you actually seeing anything happening?
Yes. So, I mean, in our business, and I did speak about it in the results presentation, when the new CEO came into the role, I had a meeting with her, spoke around the challenges that we're experiencing from a rail perspective. And since that meeting, in one of our terminals, we're now receiving about 3 trains a week, from zero. So I have got a part of the business where rail activity is up, and in fact, it's been significantly important for that business and given us quite a big turnaround. Of course, that's a small part of the economy, right, that I'm referencing. So the concern that you're raising overall around rail and the millions of tons that we actually need to be moving, we still need a significant amount of progress to take place in that space. The one thing that does makes me optimistic is that the rail infrastructure manager, that structure has been now set up in Transnet. The CEO has recently been appointed, and I'm hoping that with that kind of very direct, focused leadership, we're going to start seeing something happen from a private participation perspective. And as you say, the frameworks are in place. The policies are there. So from a reform perspective, the documentation is there. It's really around execution. And I agree with you, we do need to see a level of acceleration where that is concerned.
The part you were not expecting, Adcock Ingram, their profits down significantly. You own 65% of Adcock. From what I could see in your SEND statement, there was less demand for their products. Was that the primary reason?
So the reason was in 2 areas. The first one, we saw a volume contraction in the wholesale channel to pharmacy, so wholesale channel into your clicks, discounts, etc. And there it was more around the amount of stock they were holding. So generally the wholesalers hold about 6 weeks of stock that we supply into. That dropped to about 4 weeks. So there's a 2-week replenishment cycle that we missed, that just didn't come through the system. So we're not quite sure what happened there. We're checking now in the second half of the year to see whether that normalizes or not. So that's the one thing that took place in that space. And then the second area in terms of volumes was in the independent wholesalers. So into your cash and carries, your more informal market, etc., directly to the consumer. We saw lower volumes coming through there, and that is an indication of consumer pressure on disposable income. Whether that turns or not, again, we have to see what trading looks like. We're hoping that lower interest rates, lower inflation, etc., eases the purse a little bit. So it's really those 2 areas. So volumes were down, but because we produce a lot, we then didn't have the volumes through the factory and had significant under-recoveries in our factory, specifically Wadeville. And that gave us a big, unfortunate pressure on the margin. So, I mean, those are the 2 things that we're going to be watching for in the second half of the year. It's very difficult for me to give you any kind of forward signaling. We need to trade, and then we'll know whether those 2 things are correcting or not.
A lot of uncertainty around the world right now, Mpumi. I don't know if you watched the horror show on Friday night on TV, but are you expecting that to have an impact going forward? I mean, I think on any company that's as diverse as yours, I mean, that's going to be a major concern going forward.
Yeah, Stephen, so I never thought I'd ever say that volatility outside of South Africa is more than inside of South Africa. I never thought I'd say that, but it is true. The geopolitics are real, and the geopolitical risk is amplifying. What we've already done a risk assessment, looked at all our territories where we're operating, looked at the business operations. There's nothing that concerns us at the moment. The one area that we are watching is obviously the supply chain, because a lot of the conversation is around trade. So we are looking at the global supply chain. In our trading businesses, we procure locally, we produce locally in our factories, but we do have a basket of imports. And when supply chains get disrupted, we will feel it. It'll impact freight rates, etc. So that is one area that we're looking at. Haven't seen anything as yet, but we're looking there. And then the second area, we just staying close to our clients to see if we've got any big multinational clients that may be impacted by trade decisions and that would be a knock-on effect for us. So we're looking at it in the areas at the moment from our current risk assessment. Everything is okay, but it is volatile. And of course, one country and economy at the moment seems to have quite an influence in the world. So we're watching that closely.
We understand you. Mpumi Madisa, thank you very much indeed. Really appreciate the time. The CEO at Bidvest on The Money Show tonight.
The Money Show.
Business Books.
Well, I don't know how much you've thought about it, but from time to time I'm sort of forced to remember how much of our lives are about tribes. And I mean that in the loosest sense of the definition. So, for example, what's happening in the United States, one group of people supports one person, they're a tribe. One group of people opposes that person or just doesn't support that person, and they're defined as a tribe. And it goes to who you support on the football field, obviously Sundowns. It goes to whether your daughter drinks out of a Stanley mug. You know, those big Stanley mugs everybody has, because they're about part of a tribe. Well, there's a fascinating new book. It's called, it's about this very specific thing. It's called Tribal. It's by Michael Morris. I haven't read it, but Ian Mann has. He's the managing director at Gateways Business Consultants. Ian, good evening.
Good evening to you. A fascinating book.
Yeah, I can imagine, at a fascinating time.
And the what he does is he talks about, we must put it aside, tribes in the anthropological sense have got nothing to do with this. In fact, anthropologists are not using the word very much either. The tribes he's talking about are the tribes that grow up around. You've got the Mac tribe, as you said, and the Maga tribe, and so on. Those are tribes. And his idea was to understand, what does a tribe do and why is it so important? The book opens with work on how the human brain works. And they looked at primates' brains and human brains, and they found that why is it that human beings were so successful? Well, the typical answer is our brains are bigger. But why are our brains bigger, and what's being big do? And what they found was, they've proven this, the first bit actually shows the scientific proof for this, that big brains were developed for social purposes, not for anything else. You can have big-brained animals, or they did a study with young children and chimpanzees and orangutans, and they found that these children who never had any education, they learned things in a completely different way. They learned things by watching you do it, and then they were able to repeat it. The monkey see, monkey do is not correct. The human being see, human being do is correct. So we develop ideas about the world from watching other people with those ideas. He says there are three different types of instincts that human beings have. One of them is a peer instinct. We look to our classmates and we behave like them. We look to our co-workers, and the ones that we associate with, we behave like them. And of course, they're now neighbors and so on. Then there's another instinct that we have, and that's hero instinct. We follow celebrities. We follow strong people. We follow leaders of all different sorts. That's so built into our DNA. That's all there. And the last one is we've been channeled towards different ways of looking at how we work, and we can't resist this tribalism being part of everybody else. So what happens then is that you find that our ancestors who educated us, we revere ancestors. It happens in all strange ways. Like, that's why we like champagne that comes from the Valley of Champagne, because that's where champagne was first made. And so we give special credence to those type of ancestor instincts. So when he talks about tribes, he talks about tribes as being important because we need to know how to deal with them. Not that they're bad, they're good. And how does the whole thing work? And the whole book is how you can use tribalism to make differences in your life. I'll just give you a couple of them. In China, they've had a one-child policy since the 1980s. Now, to get the one-child policy through, what they had to do was they had to institute fines. They instituted sterilizations, in some cases even abortions. That was how they got the population to reduce. But something weird happened at about exactly the same time in Brazil. The average Brazilian mom would have 6 kids. Yeah. And within years, it dropped down to 3. And they tried to work out why that happened. And what they discovered was that there's a a media group called Globo, and they have these telenovelas. And these people were watching telenovelas with very entertaining people, but also very, very attractive, not physically attractive necessarily, but attractive and well-respected people. One of the parts that they're playing was a divorced woman who was working for herself. She had a job, she was divorced, and she only had a kid. And she became like a role model. And they found that this is a nice idea, but doesn't really. Everywhere the telenovelas moved to around the country, they watched this. They watched the birth rate decline. Prior to that, the role models were not television people, television actors, but the people were priests and were politicians. And that made a huge difference. So the fact is that we are influenced by people that we care about and we think are significant in our tribe. There's also some interesting psychological factors that come into this as well. You probably remember B.F. Skinner. If you did psychology at the university, he always spoke about Skinner. And Skinner believed human beings are basically rats. The same way as you can program a rat, we get programmed. And one of the things that Albert Bandura changed was he said that no, human beings don't work like that. The role models are probably much more important to them. And he did some exercises with where a well-dressed man started beating up on a plastic clown doll, punching it around. And they found that little children started punching that doll as well. It seems that we do things that people who are important, our role models, we take those very seriously. There's a study that was done by students from the University of Princeton, anti-bullying. What they did was they got high school students in New Jersey, about 50 of them, to write and talk about bullying in schools, mainly the writing stuff. They found that there's a serious drop in bullying in the school, not because people said so, but because they looked at the records of disciplinary infractions, and they dropped by 70%. It seems that the peers make a huge difference in what's going on, and we're influenced by that.
So you can then, if you can understand that, can you alter the behavior of a tribe?
Absolutely. I want to just give you one quick example. The Ecuadorians are well known for their disinterest in time. The higher you are in any organization, the later you're entitled to come. In English we say time runs away. Whatever they speak there, Spanish, they say time walks. So they tried to do something about time. The government put on a whole big show. They gave out toys, they gave out food. They even did a ceremony where everybody got together with some famous guy. They all had to set their watches to a particular time as the bell went. Everybody's watch had, just like in the military. They gave out door hangers that said, "You can't come in here, we've started already." Nothing happened. People ate the food, they went home. And the reason was very few people actually, maybe except kids, think of themselves as soldiers. It just doesn't talk to me. And very few people go to hotels. What was happening at the same time in a town called Umberto was that a couple of the guys got really annoyed by the fact that they'd go to the factory and half the guys were late. And they started among neighbors, getting people to take their time seriously. And then started catching on, and it got quite serious. And they realized that why are people so late? But it was grassroots. And they said they're late because of the transport. There's so much congestion. And they started working with the roads authorities to lower congestion, and that helped. They found that when people were doing it for themselves, it actually made a real difference. Where they didn't, nothing particular happened. And we've had probably the best example of how peers, how grassroots actually can make a huge difference.
So, I mean, if you want to then influence the way that tribes behave, if you're an advertiser or a strategist in business or something, there's certain things you need to look to.
You need to look to role models. People have to believe that you are like them. There's been an attempt in Texas, keeping Texas clean. And they used to have these people. There was a picture of an Indian tribesman who was crying as he saw the filth all over himself and said, "Keep Texas, clean up, don't mess up Texas." That didn't make any difference. It won an award for the best ad, made no difference. Then they got guys, I think they're called the Texas Cowboys. One of them was called, I remember the name, he was called Too Tall Jones. And Too Tall Jones was on the highway and he picks up a can. He says, "What are you doing?" He says, "I want to find the guy who did this. Don't mess with Texas." And there's a whole thing about messing with Texas. But people could not associate themselves with Indian tribesmen. They can associate with their tribesman, which is the football player. And they've been doing it over and over again. All of them are pushing this idea. I'm a Texan, and as a good Texan, we don't mess the place up.
Ian Mann, thank you very much indeed. The book is called Tribal. It's by Michael Morris. And of course, we know that's having a huge impact, that sort of feeling on the world right now. In a moment, Professor Mamokgethi-Phakeng.
702 with Stephen Grootes.
Email him on stephen@702.co.za.
Well, as you know, South Africa is a country that has had many people who do many different things as part of their career in a way to make a living for themselves and to progress through life. And sometimes things happen to people. People end up being known for something, but they're often so much more than that. Professor Mamokgethi-Phakeng is a professor of maths education. If you had to Google her, you would probably see the letters U, C, and T very closely after each other. But she's done many other things, and she's in our studio now. Professor, it's been a long time since you and I last saw each other. Good evening, and thanks very much for coming.
Thanks for inviting me, Stephen. It's been a long time. Good to be here.
So let's start at the very beginning. You grew up in a community of our core north of Pretoria, north of Tshwane. What kind of community were you growing up in? Because it's a very different place to where South Africa is now.
Well, I mean, having grown up in apartheid, one can say I grew up in one community. So I grew up in the village in Marapiani, which is a little bit different now because there isn't as many people as there used to be. People are moving to the cities and so on, and younger people are living there. And then I grew up in Garankuwa, which of course, as I was growing up, transitioned from being a South African township to being Bophuthatswana. As I always put it, Bophuthatswana happened to us. We woke up one morning as teenagers and we were in Bophuthatswana, and our neighbors who were Shangaan, Zulu, whatever, moved to a new area which became Soshanguve. So it's very different, but I still feel very fortunate that I grew up in Bophuthatswana. In 1994, when President Mandela was released, in 1990 when he was released, I was already a graduate, I was working. When 1994, when we voted, I was a postgraduate. I was, so I feel like I saw the South Africa before the homeland system, South Africa during the homeland, and South Africa during the change. And, I can confidently say black people can lead and run countries even when they are corrupt. It can be efficient because I saw it happen in Bophuthatswana. They can start institutions that run smoothly and efficiently. And I write about my time at University of Bophuthatswana. I'm glad my dad insisted that I went there, even though he hated Mangope.
It's interesting. I've had plenty of people actually tell me that experience of growing up in Bophuthatswana. I know one person whose sibling was tortured by Mangope, and has a completely different view. So there's a duality around that particular homeland. I think that maybe there isn't about some of the others. I didn't know this, but your father was a radio announcer on the SABC.
Yeah,
a long time ago.
Interesting. He was one of the first black voices on radio. Wasn't only a radio announcer, he was also an actor. He was a very well-known actor on radio. At that time, stories which used to start
radio
at 8
plays.
o'clock. Radio plays. In the township, we call them stories. So, and people used to travel from all over the country wanting to meet him. Quite a personality, sense of humor, very smart, no metric, but a dreamer and a visionary. I always say, you grow up in poverty, material poverty, and there's poverty of ideas, of love, of whatever. We had wealth when it came to believe in us, education. We thought we were the smartest people ever in the township because my dad and grandfather made us believe that, even though sometimes we had to borrow maize meal next door or salt next door.
Did some of his confidence or experience, or I don't know, did some of that rub off on you a little bit?
Absolutely. I mean, I think of all my siblings, I am more like him. And that's why I'm glad I don't drink alcohol. And he's the reason why I've never had alcohol in my life. Because I am so much like him. I would definitely have gone his way. And as I grow older, my sister stops me and says, "That's Dad. Do you know that? And you hated it when he did that, but it's exactly that, you know." So yeah, some of his values definitely rubbed on of me. His way of being, I can see him in me as I grow older and older.
You've previously spoken about studying mathematics at university and being one of only 2 women in the class.
In third year, yeah. My friend didn't make it to the 4th year because it was the 4th year. It was a 4-year degree. So at Maths 4, it was me and the boys.
Was there something in that experience that drove you to want to continue in maths, to become a professor of maths education? I mean, you would have had, if you had 4th year maths at that point, there would have been other options. But you decided that you went and did some other things, but you decided that maths and maths education was for you. Why?
You know, Stephen, it's people don't believe me. It was the easiest route. Everything else was hard.
So you found maths easy?
I don't want to say easy. Let me just say doable. My transcript is crazy. Maths is all above 70s from first year. And I flunked chemistry in first year. Couldn't pass it. I dropped it. And I went to the counseling center and they said, "Why did you fail it?" I said, I didn't study it. I spent time doing maths because I like it. Can you help me just get the degree with maths? I didn't know that maths is special. My parents didn't tell us that maths is special. They told us you got to be excellent at everything. My brother didn't do maths, and yet he was regarded as the smartest at home. And we don't understand it up to today. He's the only one who didn't do maths. So even if you got 100 at maths and you got a 40 at history, you got punished because you got to be excellent at everything. So it was and I still say, Stephen, I think we should talk more about maths because actually it's the easier option.
So, I mean, business, this show, the Money Show, we try not to mention numbers because we don't have a blackboard. And to talk about numbers when you don't have a blackboard is actually very hard.
But that's arithmetic.
Yes, but it's all about maths. And, I mean, I always feel, and I'm not a maths person. I am a history person, I'm sorry to say. But I'm not a maths person. But it seems to me, even I can see that this country, it seems, has a problem with maths.
True, and I'm saying it shouldn't. Because if you think about it, it is much more difficult to study history or biology than maths. Because with maths, the big ideas don't change. The math that you learn in grade 1 stays the same, even at varsity, even at PhD. But think about it, and you don't have to commit too many things to memory. Of course, you have to, some things have to go to memory, but it's not a lot. But think about biology. I mean, I keep thinking there's so much children have to commit to memory. The bones on your hand, on your fingers. First of all, these things are called fingers on your hands, and the ones are called toes. The bones have different names. The veins have got different names. You got to keep all of that in memory. In mathematics, the theorem of Pythagoras that you learn in grade 8 remains the theorem of Pythagoras in grade 9, 10, 11, university, everywhere. The Pythagorean theorem doesn't change. You apply it the same way over and over and over again. So the big ideas remain the same. So actually, you commit very few to memory and you use it throughout. It doesn't change. In other subjects, it changed. I mean, European history is not the same as church history or whatever, or African history. It's all different. And, you know, and also it depends on, I don't know, the analysis of it is different. I think it's much more difficult, actually. You know what I mean?
Where are we going wrong then in maths education?
First of all, I think we preach the message that it's difficult. Here's the thing. I had no idea that there's anything special about mathematics. And I'm so glad that I didn't, because had I known, who knows, maybe I would have been scared of it. So I didn't know that it's special. I went to university not even knowing that there's anything special about maths. And I think That's privilege. It's privilege. So children of today don't have that privilege. Before they even get to see what maths is, they're already told that it's, and they're told in so many ways. You don't have to tell them that it's difficult. You just have to tell them you are not good at it. Like you just said, you're not a maths person. Hello, were you an Afrikaans person?
No.
Were you a geography person?
No.
But it doesn't matter.
Yeah.
Right? You don't own up to it. You don't declare it. It's what we declare. It's the fact that people feel comfortable to declare their inability or insecurity with mathematics. That's the first thing. And it's who declares that. It's not the people who don't matter. It's people who matter who declare that. So I always say, if we can start with the one thing, if you have nothing good to say about maths, don't say anything at all. We're not interested. And then, of course, we can start. We don't even have to go to curriculum.
Yeah.
We can just start with time on task.
It's interesting because I can see your passion. Okay. I'm sure everyone can hear it. And I'm interested in the move from research about maths education, teaching maths education, to management. You know, often someone always says the example, you can be a mechanic in a workshop, but can you manage the workshop? Yeah. Managing anything in a university. I think it was Henry Kissinger who said academic politics is the worst politics.
It's the worst politics.
Yeah.
It's true.
We're going to keep that. But I mean, what informed that? I mean, was there pressure? I mean, was there requests? Were you interested?
I mean, there's a time where I thought I should take this challenge up. I mean, by the way, I never stopped being an academic. Some people stop being an academic. Some people actually become vice chancellors without being academics. Yeah. They don't even have PhDs. Disgusting, I think. But they become vice chancellors without having a PhD, without having published, without having won a grant, without having raised money for their own, for themselves, for their own research group, for their department, for their university, for their discipline, for their, you see, and I never stopped. I was a scholar. My last rating, Stephen, expired last year. The B1 rated scientist. Yeah. And my rating expired last year. By the way, I didn't have to be a rated scientist. Yeah. But I did it. Of course, I pursued it because I reckon that I'm in the first line of, black women, and I didn't want anyone to ever think that I slept my way up. And it's very important. And so I don't separate the two. Some people separate the two. Of course, it's the academic route. You can get to the senior and the administrative route. But I took the challenge of the administrative route. And my mentor told me at that time when I made the decision, what's my downside? Yeah. And we touched base again. I mean, we're good friends. And she said, remember we talked about that. And she's right. And if we have time one day, we can talk about it. But I took that challenge because I reckoned that higher education needed someone of my personality, skill, daring personality to get things done. Even when I applied as VC, I reckoned that it was time for someone like me who's not scared of students, who can walk into a room that they're occupying and sit and dare them to do anything.
We're going to have more on that in a moment. Professor Mamokgethi Phakeng, former Vice Chancellor at UCT, done so many other things in the Money Show studio until 8 o'clock. Good evening.
The Money Show with Stephen Grootes is brought to you by Absa CIB, a Pan-African bank invested in your story and the potential it can unlock because your story matters. Absa is a registered FSP.
Speaking to Professor Mamokgethi Phakeng, God, listen to me this evening. She's here too to watch me do it. Professor Mamokgethi Phakeng, done many things with her life, including spending some time at the University of Cape Town. I would like to ask you a question about that. And I don't want to go back into everything and the rights and wrongs. You're allowed to have some distance from that. Yeah. But I've been thinking about it a bit, and it seemed to me that what happened there has elements of disputes that we see in our society. Some of them recur, and they're different things. So, for example, in academia, in politics, but in companies. I can think of the case at Exaro quite recently where there's been a dispute. And often these things are very public. And I must feel, I've never been in one. I've reported on many of them. And I never get the whole picture. And I know when something's developing, you don't. But I can see that they're very intense. They must be very difficult. They must be quite emotional. And I wondered if there was some value in asking you a slightly different question. If there's anything that you learned from all of that, that you think someone in a similar dispute in an academic institution or a company or something that could be valuable for them. Any lesson you learned that might help a person in a similar position at some point in the future, because what elements of what we saw there are going to happen again.
I mean, it's interesting how you phrase it, right? And for me as an academic is like, these things happen all the time.
Yeah.
When do they become public? When do they not? I'm going to give you a challenge, and whoever is listening now, to go to the High Court papers and see a dispute at UCT right now about lying, governance. It's got nothing to do with me. It's got everything to do with the person who they appointed as interim. It never got into the public eye. Nobody talked about it. They are taking each other to court with professors. It's all men, and there's no black African, right? But it's in the papers in the High Court. You can get it online because it's going to court isn't there. And the question is, why do certain things become public and why do other things don't? Park that. It's all political. The important question that you're asking, Stephen, that is key, and I'm glad you're asking it now, is because in every journey there are lessons. And this is the thing that I talked with my mentor about, who I love dearly, Jill Edler, that and I run a mentorship program now, and I talk to my mentees about it. I do one-on-one and so on. In leadership, there's leading downwards and there's leading up. And my mentor always said to me, you're brilliant with leading down. Leading up, you're dodgy. But here's the problem. Let me break it down, what leading up is. To be able to lead up, you got to understand what is up. So up is your seniors. Okay? I have no problem with that. But up is people who are older than you, who may not be your senior. They may not be your senior academically or administratively, which means they didn't work as hard as you do, or they were not as smart as you were, right? But they're up because they're senior in age. Some of them are senior because they've been in the business longer than you.
Yeah.
I didn't start in academia. I've been a teacher, I've been in NGOs, I've been everywhere. So, but then here's the other category of up that we can debate with whoever is interested. But I categorize the other part of up that's very difficult as everyone who's more privileged than you. They've got power. Okay. Either because they come from a family that's been in the academic, so they grew up in there, their father was a VC or a dean or whatever, or they are privileged in society. They benefit from structural privilege. Okay, whatever structure, whether because of their race or gender, right? The bottom line is whether you like it or not, they are up. And you've got to learn how to manage them, because these people are up. Some of them own newspapers and have got a lot of money that you don't have and a lot of influence. You've got to know how to manage it. I rejected being able to manage that. I wanted to treat everyone the same. If I can punish a cleaner for bringing the university into disrepute, I must be able to manage the person who's up because of their privilege or because of how long they've been in the university. And I would say, otherwise we are not transforming. Because why are we willing to ruin the career of this small little person? They might be white or black or whatever, but we're not willing to challenge this person who's more powerful. And so if they write an article or a book or whatever that brings the university into disrepute, it's much more damaging than this person who sends an email or writes an Instagram update. Do you know what I mean? And for me, I wanted to treat them the same. And I said consistency. And I say transformation is about the distribution of privilege. If you can't distribute privilege, then you're not transforming. For me, transformation is not about race, people getting jobs. Everyone must bloody work hard and earn it. Okay? And so it's the managing up, the leading up.
Yeah.
And I sometimes talk about it as the capital P politics and the small letter P politics. And I differentiate about it. And I've had time to think about it as I take a forever time to write my book and reflect on this. And I own it. And I tell my mentees, I want to teach you something that I either refuse to learn or I was never taught. You can take it or you don't take it. Some people will say, no, but you could have been strategic, blah, blah, blah.
Well, I was going to say that, yeah. I mean, that would have been some advice I'm sure someone gave you.
Yeah, but what does strategic mean?
Yeah. Well, strategic
means keep the status quo. And I wasn't willing to keep the status quo.
Well, it means that in the short term, but not in the long term.
Well, I'm not. You see, some people, some of us, I was born in a sack, Stephen. I'm not your ordinary human being, right? I came out in a placenta. And some of us, I don't think about that all the time. I mean, some of us are meant to think things to change. I don't think about it in that way when it happens.
Yeah.
I think about it in terms of leading, guided by truth and principle. Do you see what I mean? But in these positions, it's political decisions. Yeah. It's not truth and principle. That's why I won't go into politics. I'll be fired within a month because truth and principle, it's not being, you must be strategic, whatever. What is that? You know, and you've got to make a choice. And some people will survive because they're quiet, they're willing to be trampled all over and whatever. I would not allow myself to be trampled over. There's truth and principle. That's what we follow, not politics. And I didn't lose, by the way.
No, well,
it wasn't a bad decision.
I didn't say that you did.
What a wonderful way to end my career, Stephen. I had gotten the second term.
Yeah.
Even if I spent the second term, I wouldn't have been this lucky.
Yeah.
So glad, thank God.
Professor Mamokgethi Phakeng on The Money Show tonight.
Thank you.
The Money Show with Stephen Grootes is brought to you by Absa CIB, a Pan-African bank invested in your story and the potential it can unlock because your story matters. Absa is a registered FSP.
You'll have results from ShopRite and Nedbank tomorrow, and who knows, maybe we'll get a budget. But I doubt it. Good evening, it's 8 o'clock.